Hello, everybody, and welcome to this week's podcast for the week ending March 8th, 2024. My name is Miles Clark. I'm joined here by Will Gibson at the other end of the table. Nice to have you, Will.
Great to be here.
How you doing?
Excellent. Love the formal intro.
Yep, of course. All right, well, continuing on with the formal intro, no
Yep.
better way to do it than just I guess hopping into the performance, right? Mostly positive week
Yeah,
for the last 7 days.
Yeah, fantastic week for pretty much whatever you owned for the most part. Gold up almost 6%, hitting all-time highs. Bond funds like TLT is up 2.5. International equities up 1% to 2%. S&P 500 up 70 basis points. The average stock, call it the S&P equal weight, that was up 1.5%. So overall, incredible week. And as we're talking today, the market's up like another 1%. So these will just keep getting inflated.
Yeah, hint. We're going to be talking about that equal weighted index
Yeah.
really throughout the podcast today.
Yeah.
I think that's a decent place to start. But we're seeing just a continuation of green across the market. It's not Christmas, but we are seeing a bit of green, which is nice. Where do you want to start, Will?
I think, like you alluded to, let's talk equal weight. I think that's probably the biggest conversation of the week.
Yeah.
Yeah, gold went to an all-time high. I think that's a point we can make later. But I think the biggest elephant for the week is the equal weight for the S&P 500 because people were screaming about participation being bad, breadth being poor for a long time. And now you're having equal weighted funds like our RSP, the equal weight S&P 500 hit all-time highs for the first time in over 2 years.
It's been quite a while, I
Yeah,
think.
790 days is the distance between the last time RSP hit a new all-time high and the current time that we just hit an all-time high.
Yeah, that's quite a while. Quite a
Yeah.
while.
I would say so. And I was looking at some of the performance for this, and I'll probably do this in the report tomorrow. There have been 6 other times that it's taken longer than a year for RSP to hit a new all-time high.
Right.
So again, 6 other times in history that started early in 1990 that you've seen RSP, the equal weight S&P, take longer than a year to go back to a new all-time high. If you get all the words
Yeah,
straight there.
I'm working on it.
Yeah. And of those 6 other times, equal weight S&P 500 was positive 6 months later every time, positive 1 year later 100% of the time, and 2 years later it was down only one time, and that was in 2002. So pretty good batting average for equal weight, and you typically saw equal weight outperform cap weight over those same time frames.
Well, you know what they say about 100% of the time indicators.
I know, right? There's always that
Yeah,
one time. I
there's
know.
always the one time, but I think that's good to see, right? And we were talking actually just before this, right, about what a strong average stock or strong just kind of every one stock, one vote looks like for
Yeah.
momentum, right? And I was kind of saying, is that a good thing? Is that a bad thing, right? When momentum is starting to pick up, and that's because it's attracted to these larger tech focused names that have driven the market higher over the last really better part of the 60 weeks or so at this point. So we were chatting about what a strong equal weighted index looks like for momentum. You had some nice thoughts on that. I thought
They were incomplete, but yeah. So the idea is that short term it could be problematic for momentum. So if equal weight keeps beating the S&P cap weight for the short term, momentum's not owning the equal weight. It's owning Qs, it's owning MTUM itself, it's owning like funds. But if you continue to see that the long term, that'd be great for momentum because it would adapt, it would buy the equal weighted assets, and that is a pretty big deviation from your traditional benchmark.
right.
So like SPY is your traditional benchmark, excess of 20-25% technology. NDX, traditional benchmark, cap weighted as well. So if you get into an environment where the average stock is doing well, but the big guys aren't keeping up, then that's actually great for trend following because you can get away.
Right. Two kind of market environments that were similar to a situation which you just said where, hey, the big guys aren't doing that well for a specific year. 2022 kind of rings very similar, right? Technology doing really bad.
Yeah.
Momentum was able to kind of shy away from that and overweight areas like energy, consumer staples, utilities, those guys, which are relatively smaller than tech.
Exactly.
Right. Or if you want to look at maybe perhaps a more longer term market environment, something like the 2000s, right, where point to point domestic equities were pretty much flat for the decade. Actually, they pretty much were. But momentum was able to go out and say, oh, international equities looks good right now. Oh, commodities look good right now, right? And kind of pinpoint those specific areas outside of just the domestic equity core.
Yeah, sector rotation.
Yeah.
Being able to, like you said, overweight small sectors or overweight smaller stocks in the market. So I think that's a really great opportunity, to be honest. If you see equal weight, the average stock continue to do better than that dominant core that we've been in for the past really 10 years
Right.
as a whole, especially the past few years. I think that could be great for trend following and people that follow our research and strategies.
Yeah, because like you said, I mean, you can only get so much more overweight tech.
Yeah.
Right. So when
Yeah.
you're comparing yourself to the core, if the core is doing really well, you can only get so much more core than the core, right?
Yes.
That's kind of a hard
That's
way
the
to
of
say
saying
it.
Yeah.
But you can only do so much more of that, what the core is doing, than what it's already doing. So if it starts to kind of peter off, again, I think the answer is slowly. We're not looking
Yeah.
for an immediate shift.
Right.
That's the next key there.
Right. Because again, in the short term, momentum's not owning the equal weight smaller guys for the most part. It's owning the stuff that's been working. So for the short term, you could see some underperformance as tides change, but momentum would pick up on that if it's material enough. At this point, it hasn't been material enough. I mean, if you look at trailing 1 week, 30-day, 60-day performance, the spread is just not there to be a material change of the guard. But should it keep going? Totally possible.
Yes, and that's important to note. Hey, we're not calling that this is the immediate,
Right.
this is the
Yeah,
shift
yeah.
here. We're just saying this is something to watch because it
Yeah.
is another group that's doing well outside of just the core, which for the market in general is
Good.
is good.
Yeah, something else I want to bring up before we get off the equal weight at S&P 500. We talked about 6 other times
Yeah,
that
I got
the
you off
equal
on a
weight. No,
tangent.
no, no,
My
no.
bad.
That was a good tangent, I think. So again, 6 other times that you've seen the equal weight take longer than a year to get back to an all-time high. If you look at the other times, so like the middle of the pack,
Yeah.
maybe it took between 100 days and less than a year, so 364. We're talking calendar days here, somewhere in that range. Those returns were positive, but not nearly as positive as when the equal weight's been below its all-time high
Right.
for more than a year. Which intuitively makes sense, right? Because you're saying, oh, we've had this prolonged kind of base build recovery.
Yeah.
You would think that you would have some more upside to see.
Right. It's not like it's like just a brief pause and then not what brief is 100 days or whatever, but brief as in, but it's kind of renewed market cycle if it's longer than that kind of point.
Yeah.
That's my thoughts on that at least.
Yeah. So I don't know, that's something to keep in your mind. I'll have some more thoughts on that for the report tomorrow, but overall, equal weight going to new all-time highs, great sign for market and maybe trend following long term.
Yeah, another all-time high. So I was thinking about this before the podcast. How did I become the office proclaimed crypto enthusiast?
It kind of just got assigned.
I know. I like it as much as the next guy, but I mean, it's like, oh, Miles is interested in crypto. I'm like, listen, I might be the youngest here, but that doesn't make me the Dogecoin master here. But point being, following suit with my title in the office, I have Bitcoin all-time highs. What do you think about that?
Can't ignore it.
I know you just can't.
You can't ignore it. It's gotten bigger in size. Not totally competitive with, of course, other asset classes, but it's grown a lot in size. It's gotten a lot of attention. You've gotten spot Bitcoin ETFs coming out that have gotten a ton of flows. So yeah, it's hard to ignore. It's kind of becoming a more viable asset class that people want exposure to because people debate like, oh, what's it worth? Like, what's the value? It's worth what someone's willing to pay for it, and people are willing to pay for it right now.
Yeah, about $68,000 apparently. In terms of something that I think is actually pretty applicable to our research, our methodology, I can't ever say this, but the Bitcoin halving or the whatever the rewards for mining, the additional kind of all the crypto lingo, the rewards for actually going out and doing the complicated math and pulling out and mining Bitcoin. It's actually being halved coming up in, I believe it's April, right? So the supply, to bring in some NDW jargon here, the supply of new Bitcoin is going to be essentially cut in half. And these are typically pretty big fundamental stories. There's been some research out there that I've been reading, perhaps that these aren't necessarily big price actions, but they do get people reading and watching the space, which I think for an industry as young as crypto, that's probably more important than the short-term effects of getting rewards cut in half.
I can see that.
Yeah.
Yeah, no, that makes sense.
Because you think about it, they're planned, right? So you kind of know when they are. So an efficient market would essentially
Yeah,
bring those out.
markets forward looking has
Yeah.
kind of already priced that in too.
Yeah.
Yeah. That
But
makes
anyways,
sense.
you got plenty of fundamental stuff. You mentioned the spot Bitcoin ETF. So there's some fundamental drivers behind this. I'll be honest, it just feels more legit this time. And we're sitting here at nearly $70,000 for a Bitcoin. It feels more legit
Mhm.
today, at least in my perspective, than it did when it was at 16,000
Oh,
a couple
yeah.
years ago.
Yeah, I mean, sentiment builds, flows typically follow price to
Yeah.
the upside. So that makes sense to me that there's a lot more attention and probably rightfully so now.
Yeah.
All right, what else we got? We had equal weight, we had Bitcoin, small caps, probably
Yeah.
worth throwing a bid to.
Yeah, they are. I mean, that they kind of fall in line with the increased participation we've seen mentioned, equal weighted assets. I've also, kind of brought up songs in the past for, whatever. This week's song is going to be, can I get R.S.P.E.C.T, respect, for some Russell 2000 small caps. They've done pretty well, right? You look at that RUT chart,
Yeah.
now on 3 consecutive buy signals, series of higher tops and higher lows. I think it looks good.
Yeah, yeah, it looks good. Yeah, there's plenty of work left to do.
Yes.
A lot of the other big guys have gotten to the point where there's no overhead resistance. Like we're at all-time highs for a lot of the others. RUT small caps still have a lot of overhead resistance, but it looks like they've put in the work that they can now maybe handle that resistance. I was looking at this past 30 days. I didn't know the performance spread was this big. Small cap Russell 2000 is up 6.75%, almost 7%. S&P is up 3. I mean, that is a significant spread
Yeah.
over 30 days that I didn't know it was that much.
I didn't know that either.
Yeah.
Thanks for bringing it up.
Yeah. So again, small caps, good participation there, good participation across the large cap space. Overall, pretty positive. Something that I'd be curious your thoughts on. So gold also hit an all-time high. Gold is often seen as a more store value
Right.
asset. People,
Defensive.
yeah, people can flock to gold in times of uncertainty. Now, I think gold, maybe there's some other catalysts here because the prospect for interest rate hikes have kind of come down. I think gold maybe saw that. So it rallied because, again, if interest rates rise, the opportunity cost for holding gold is high.
Right.
Because gold's not kicking off a 4.5% coupon like
Right.
treasuries would.
Right.
So you rather just own safety in treasuries, but gold with rate softening a bit, gold running higher. That's an interesting kind of. Is this defensive tone? I don't think so, because over time, as a store of value, gold typically appreciates, just not as much as other areas. Any thoughts or?
Yeah, my thoughts are 4 letters, and that's SMCI.
Oh my gosh.
So it's in the Russell 2000, but it's going to be kind of moving over into the S&P 500, right? So I think we're talking in our research chat something like 150 basis points of the Russell 2000's gain this year attributed to super microcomputers. You remember that?
Yeah.
Yeah. So point being, I think that there's a lot to that too. Now, in terms of the gold rise at the same time, I think the rate aspect for gold is more prevalent than perhaps the defensive nature.
True.
Because we're still seeing tech focused areas. If we were seeing a defensive minded tone in the equity markets,
Some other equity sectors do well.
right, exactly, which
Yeah.
we're not seeing.
Yeah.
So I think that it's more the rate story.
Weight of the
that-
evidence that
yeah.
rates versus
Yeah.
a different tone. Yeah.
One thing we didn't talk about before was Apple. We didn't even think about
Oh,
that
yeah.
and setting that up in terms of getting the chart up.
Yeah,
It
yeah.
moved down. So we have a technical attribute rating. If you're not familiar, it goes from 0 to 5. It's based on we call them technical attributes. It's based on
Very
4.
fancy.
Yep, very fancy. 4 relative strength points, strength against the market and strength against a peer group, and then 1 kind of absolute. Are we in a positive trend? Are we in a negative trend? So if you get nothing else from this, stocks threes and higher are good. Stocks 2s and lower are maybe not as good.
Yeah.
Apple has
Bad.
been a stalwart above a 3 for quite some time, with brief points where it's dropped to a 2 or lower.
Yeah.
With recent action, I think it's down about 10% for the year. It's moved down to a 2. So just keep that in mind.
12%.
12%, even more than I thought.
Yeah. We've, I'm sure, had conversations about this. We'll probably have more about it, where Apple's like a position that nobody ever wants to
Yeah.
sell. They just keep buying more and more and more, and passive indexing is kind of doing the same, where it's a huge weight in the S&P 500. But thinking if you want to stick to a process, you want to be disciplined, you want to be objective, Apple's rated as a sell now
Yep.
on the platform. There could be other reasons for ownership, fundamental, absolutely possible. Tax considerations, totally possible. Just saying, strictly speaking, technically here, there's not enough compelling evidence to be buying new shares of Apple.
Right. Well, I think one of it sticks with me to this day, right? When I was interning a couple years ago, I don't know if it was you or whatever, but the point was cover up the name of the chart. If
Yeah.
it's Apple, if it's Microsoft, if it's, Costco for you because you love it so much. But the point is, if you cover up the name and you don't like what you see, you don't want to be owning it, right? Regardless of what maybe the fundamental story, whatever, regardless of what you see on TV, regardless of
Yeah.
the phone you pull out of your pocket. Point being, if
Yeah.
the price doesn't agree with you, the price doesn't agree with you.
Yeah.
So that's what I think about, and I use that in my analysis every day, probably subconsciously.
Yeah. No, I think that's wise. It's so much easier to say that than
Yeah.
like go out and do it and tell somebody like, I know you've owned Apple for 15 years. We're gonna sell it all.
Yeah.
Why? Well, it fell to this 2 rating on Nasdaq Dorsey Wright system.
Yeah.
But there's a story for it,
Yeah.
is the point. And there's a real demand supply story that can be told, as you're saying, with charts.
Yeah. And I think a happy medium, and you might disagree, like we just said, oh, it's technically weak, you should probably trim or whatever it is. A happy medium that you might be able to get over is like we just got to stop buying focused exposure towards it. Look for opportunities to trim if you're kind of down on positions that you purchased a while ago. Take those as tax loss, kind of deals, if you will. But
Sell calls
yeah.
if you need to generate some income on it.
Yeah, there you go.
Yeah. There's options. Any other kind of big stories, or do we want to talk individual stock and we'll wrap it up there?
Nothing.
Nothing?
Yeah.
All right. I think the only other, and this makes sense, we were on Apple already. Other individual stock was going to be Target, right?
Yeah.
That was tremendous move over the past week. I think it was up big on earnings, right? It was like 10% or something.
Yeah, it's up about 22% this year.
22%. Okay. For
Yeah,
the
no,
year.
yeah, on the
Okay, yeah. That's incredible. This was a low attribute stock. So speaking of the rating system, this was rated as a sell up until March 5th. So Tuesday moved up to a 3 rating, which is a hold on our system. If you look at that chart, I'd be curious your thoughts here. I mean, it looks like it's back in an old range that it was in before, and it's got a lot of resistance overhead.
Yeah, you know what this reminds me of? Oh my gosh, I'm such a nerd. I look at this chart and I think about Disney's big pop on the back of
yeah.
earnings. Like you end 2022 or end 2023 at lows, right? Then you put in kind of this range of support of a little bit below around the middle of the trading band. Then you have a big reaction up to really significant resistance. So talking about Disney was been able to turn it around a little bit. Its technical picture has improved. I'm just looking for basing here at this point. Let some old values fall off, get some new normalization, if you will, because right now we are way overextended. So looking for a bit of normalization. It's a 3, so it's technically acceptable. I'm just waiting for us to kind of find some localized support.
That makes sense because 180 for Target looks like it's going to be pretty tough to get
Yes.
through. Honestly, this kind of reminds me of the Russell 2000 chart before we broke out of that trading range. You saw these 2-3 attempts to get through an area of resistance, didn't happen. So I think Target, that would look good to me. Like if you can break out at 184 above current levels, I think that would be pretty constructive. But I agree for the near term, the overbought story, I don't think can be overhyped right now. I mean, the weekly data distribution is 180%. For all the jargon that we're just saying, it's super overextended.
Yeah.
At this time. Again, this is another kind of selling calls, covered right type of position could make sense here. For Target as well, it was rated low going into earnings. It was a 2. And if you look at the studies, you typically don't see low attribute stocks go wild on earnings. You typically see higher attribute stocks perform a bit better on earnings day. So overall, kind of not the norm of what you'd see, but that's how the market goes. Surprises are always the biggest catalyst. It's never what everyone expects is going to happen. Like everyone expected the market to keep pulling back. Never happened. Maybe people expected Target to go nowhere. It blew up. Just surprises are the ultimate catalyst.
Well, I'll tell you one thing. We might have thought that it was technically unactionable by NDW standards. What do you think our significant others thought? They're at that time.
We talked about this a long time ago when Target got added as a staple.
Yep.
Do you remember this?
I do. Yeah.
We're like, oh, Target wasn't discretionary, got moved into XLP, I think. And I'm like, what do you think about that? And you and I were talking, we're like, it makes sense.
Yeah.
I think our significant others go there several times a week. I don't know if they buy anything when they go there.
I think they're just walking around,
There's-
looking at candles, looking at the chip and go at Joanna
Yeah.
Gaines section.
Oh, yeah, that's a good section.
Uh,
I've yet to get the Target like debit card, and I think they're starting a membership now too. It's like
Interesting.
it's
Get
not-
that subscription revenue.
yeah, actually, and they brought up Costco, and,
Oh,
and they're
interesting.
like hey, this has worked well for other retailers. Walmart has their Walmart Plus. Target's getting into some subscription type based model.
I hate it. Whatever they can do on a monthly basis to dig into my wallet,
Yeah.
take out $6, and then I'm gonna forget about
Yeah.
it, and I don't even use it.
Any
But
way to like build customer loyalty
Yeah.
is like really wise, because you see that with reward points, Chick-fil-A points, Chipotle points, even credit card points. You know, people will use certain cards more, go to certain places more if they get better multipliers. Same thing with Target. So maybe that works out for them. I know Cassidy will keep going nonetheless.
Same with Gabby. Yes. All right. Well, we've droned on for long enough. We appreciate your time this week, and we will be back next week to discuss any changes upcoming over the next 7 days.